Thank you, everyone, for joining. My name's Andrew Bluestein. I am one of the managing partners of Bluestein Ventures. We are a early stage venture capital firm based here in Chicago, investing in and around the food industry across the supply chain. So we invest in everything from consumer brands to next gen commerce to digital software and to food tech. We've been investing so far over the last 8 years. I've done over 40 investments with a focus on seed stage investing. And we've seen the food industry definitely evolve and transform itself a lot over the last 8 years. At the same time, there's a lot happening today. And I'm sure for those who are in the industry with COVID, there led to a lot of new consumer behaviors, but has led to also some new challenges with inflation, labor, freight, et cetera. So, a lot of opportunities in the space and a lot of challenges. And as a firm, we thought that this was a great opportunity, a great time to launch a conversation about that and start to talk to those we know in the industry about what they're seeing and what they think is happening today and what they see happening forward. And as part of that, also look back upon, what can we learn from those who have been successful and those have, kind of paved the way on what are some of the things that it takes to be successful within food. So today we're diving into one of those, and one of the exciting areas that we like around next gen commerce, which is really about reinventing food service and grocery to think about how do we bring food to consumers in new and exciting ways. And one of the hottest areas there has obviously been meal delivery, thinking about how we get people meals in new ways, in different forms. And excited to have one of my good friends, Mike Apostal, the co-founder and CEO of Factor, to talk about really the journey of Factor. We were an early investor, led one of the seed stage rounds of Factor. And I served on the board with Mike as we navigated that journey. Me and him have had a few conversations post the company exiting to HelloFresh in 2020 and have reflected a bit on the journey. And we thought, we should probably get this on video so that we don't forget these great memories we've had. So I'm really excited to do that. So Mike, thank you very much for taking the time today. I'd love for you to maybe just give a little bit more background introduction on yourself, and maybe just tell people a little bit also, what is Factor? What's the business? Where is it today?
Yeah, well, thanks for having me. And it's funny, Andrew, when you say one of the seed rounds, it makes it sound like we were competent at raising capital, which we weren't. The business model was quite challenged. So there was only one seed round and it was small, but you did lead it. And we needed that capital at the time. Greatly needed it. So great to be here. It's kind of funny to hear success and Factor. It's still sort of weird, even though it's been almost a year and a half now since we exited. Just because many entrepreneurs can relate to this, the samurais, before they go into battle, they're already dead. And that's sort of what it was like with running Factor. You're already dead. So this is the afterlife, I suppose. And we're talking about Factor. So it's great. So my background, it's been in food and beverage. I had a somewhat parochial background in terms of went to undergrad, went into finance, got my MBA at Northwestern, then did investment banking and early stage venture capital, rose up the ranks, and then sort of got crazy and said, I'm ready to go join this insane guy, Nick Wernemont, as my partner, and he was the original founder of Factor, and jump into this ready to eat space, which nobody really knew what that was at the time. And Factor originated from Nick, who was this MMA fighter, crazy sales guy that just is awesome. And he he's working all the time, and then he was fighting and training in his off time, and had a trainer that was also a chef that would deliver meals in a garbage sack to his door, and that sort of gave him the impetus to starting Factor. You know, and I met Nick had just started the business and came in looking like he was getting beat up in his fights, even though he was no longer fighting at the time. But just looked ragged trying to get Factor going, and was looking for capital. And that's not really the type of business that we were funding at the firm that I was part of. But I said, hey, I'm here to help. And eventually, he reached out saying he was looking for a partner, and that's how that marriage began. And, at the time, I was looking at different businesses like meal kits and the like. There was Sprig, which is on-demand players, Munchery, Spoon Rocket. So you had these two segments. One is, hey, you have a facility, you can service customers within a 20-mile radius. I never felt like that had the operational scalability to truly be successful. I think my bet there was correct. It's just a really challenging business model. And then for the meal kits, this sort of led into the challenges of raising capital. Blue Apron was in the news pretty much every day, just having challenges around its operating model, massive reports coming out saying how much money they're losing. And there's a lot of investors that had invested in businesses like that had lost money. And so it really cooled the market for the space. Conversely, what I thought was super interesting about Factor is, one, it hit on the holy trinity of food: taste, convenience, and nutrition. Although I'd say early on, our taste was terrible. And our nutrition, we were still figuring out what we stood for and how to differentiate in the market, but it was super convenient. It would show up at your doorstep, same day, every week, and you'd have your meals for the week that you knew you could count on, that you could feel good about consuming. And so that was sort of front and center. And I think also what was unique about the model is it had ridiculous operational scalability, because we were shipping a week's worth of meals. So long as we were able to maintain the cold chain, we could operate out of a centralized production facility. Whereas, the on-demand players could only service this 20-mile radius, and it was meals that they were cooking to order that day. And that just becomes challenging to scale. And then we were a step above the meal kits in terms of, hey, it's fully prepared. You don't have to take 45 minutes, 30 to 45 minutes to put together a meal for your family that night. You could put this meal in the microwave, and 2.5 minutes later, you have a fully fresh, fully prepared meal that you can feel good about, that what's in the meal, so on and so forth. And so I think that's a little bit about the background. And, I think we can jump.
Yeah. Yeah. I mean, I think, I think you hit on, I think obviously the strong value proposition of Factor. And I think it'd be helpful to talk through a bit of the journey. I think we like to say it's never a straight line, and it's definitely a roller coaster for a seed stage business. So let's jump in and talk about a few of the inflection points along the way. Maybe just bring us back to the beginning. You joined Nick, and what was it like kind of just trying to even figure out this business and, getting, believers to even sign up, and, the early signs of product market fit? Like what were some of the things you guys were just trying to figure out to kind of get this business going?
Yeah, well, I mean, I think the first thing I think of when I talk about joining Nick is Nick and I did a sort of sit down work session after I told him verbally that I was gonna join him as a partner and help him build the business. And we were going deep into the financials, and that's when I sort of realized that we had 2 weeks of cash runway, which was extremely scary as an entrepreneur, first time entrepreneur. And that was one of the things that we had to, I had to figure out personally to get comfortable with fear early on. And really what we did is we just put a plan together and started to execute. I think the second thing is early on, we had to raise capital immediately. And so I tapped into my network. And sometimes when you do that, you don't necessarily get the right long-term investors, but you get the capital you need to keep moving forward. And that's sort of what we did. The challenge early on, though, was the product quality. It was very unstable. And as a result of that, you'd have one week where the meals would perform and you'd acquire a bunch of customers and most of them would stick, but the next week it would fall off. And because it was so volatile, it was really challenging to scale profitably. And so I think that's the first thing. I think the business really changed. And I know we're talking, here at your Bluestein Ventures, but I think when Bluestein came in, Andrew, when you came into the business, that's when we started to really build the foundation for future profitable growth. And the specific example that always comes to mind, I think you invested something around 500,000 in the seed round early on. And it was, I was thrilled when you guys came in because that was sort of validation. I think I was, 8 months in to Factor when you guys first invested. And it was not only validation that, okay, we have a legit investor that believes in what we're doing, but you guys came in and you dug into the data in a way that I don't know that we were there professionally yet. And it's funny. I mean, you went right to the meal ratings. We had implemented a technology feature into our system that started to track the performance of each and every meal that we delivered to customers, and customers could give us those ratings. And really that was the foundation that we used to better understand the business model, but also operationally build menus based off of that performance. And I know you were one of the champions early on that said, hey, I'm looking at these meals aren't performing. We'd have charts, we'd sit down, we'd talk about it. And that was just tremendously valuable for us at that point in time. And it sounds basic, but it really wasn't. It was a way that we needed to be looking at the business that you helped bring us to that point, which I thought was awesome. And I think that was one of the inflection points, because once we started doing that, we still had to refine quality. We still had so many challenges because early on we used outsourced manufacturing. And with outsourced manufacturing, the problem is you don't have complete control of the labor. You don't have complete control of the production facilities. So if employers are running, if you're running overtime one week to get the meals out the door, you might not get all those meals out the door. If you have a piece of equipment that's critical to the production of your product and service, and that piece of equipment breaks, it might not get fixed right away. And that's going to hinder quality. So it's this constant battle between you and the manufacturer around, what they're willing to invest in and where they're willing to spend money, what limitations you then have on the menu, and how that leads to impact on quality. And so, we were outsourced manufacturing, and that was a huge challenge early on, and that led to. And maybe I pause, Andrew. I'm happy to keep going, but
yeah, no, I think I just hit on, just one of the things that you hit on that I like to just accentuate around figuring it out in the beginning was, we often find working with entrepreneurs is you guys had this great business, concept, and we're seeing great traction, but figuring out and actually getting to true product market fit, right, is always kind of that holy grail of a seed stage company. And you guys, needed to think about how to put the right processes in place. And I think meal quality at the beginning, I used to joke to people that I kind of in the beginning say, oh, we invested in this food business, Factor, you should try it. And they'd say, oh, is the food good? And I'd say, well, it's okay, but it's convenient, right? And when you guys actually were able to kind of figure out how to turn okay into actually it's really good and like you should definitely eat this food, that was, you know, a key unlock. And I think we always look back to, you know, a key inflection point was, you know, we like to say July 4th, 2017, when we had a board meeting that the business was teetering on the edge of you know, kind of potential insolvency. And we as a team, you know, had to really think about how do we, you know, carve that forward. And maybe it's worth kind of talking a bit about just like seeing death at, you know, potential death at a seed stage, and how from there you were able to kind of pull it forward, and kind of, you know, what it took to kind of start getting yourself out of the seed stage into more of a growth stage.
Yeah. Well, I think there's a couple of things. There was many near-death experiences. I think July 4th just resonates with all of us. But before that, I mean, when you talk about food quality, what's funny is, I don't know if you'll remember this, but we were in a board meeting. This is before July 4th. And you know, I had just like the night before, I was hungry late at night. I had Factor meals in my fridge. And I came to the board meeting. I'm like, listen, I am not happy right now because I went to Wendy's last night to get dinner instead of eating my Factor meals because our quality isn't there. And I think like that just speaks to where we were at as a business at that point in time. And like, it was my sole driving force for a period of time. It was like, we have to improve the product. We have to improve the experience. And that, because we saw efficacy around that, that's where I continued to just focus relentlessly in the business. But I think to your point, like July 4th was a day that I think many of us won't forget. We as a business were hit with a lot of things at that time. We had just moved to a new co-packer at the time, which we thought was going to be better, but we saw some startup challenges. We had challenges around the holiday with logistics where boxes were just not getting delivered to customers and we'd have to eat those costs. We had overhired a bit because we started to see a bit of efficacy. But even before that, you know, Nick and I'll never forget, we were at a you know, out to lunch at a, you know, lunch. It was a business. We were talking business. We didn't really take lunch. I don't want people to get it twisted. But we were out talking, and like we literally got in a fight where, you know, we're like, hey, we got to figure out how to get the product in the right place, what we need to start doing. And that's where we said, hey, weekly, we're going to talk about meal ratings. This is exactly how we're going to use it to build our model. We're going to do kitchen meetings where we sit with the co-man, where we sit with our people that had boots on the ground at the co-man. And we're just going to tick through the different issues each week. And that was probably back in May before this July 4th. And we, you know, I started to see efficacy. I started to see our retention go up. I started to, you know, see a lot of improvement. So I knew going into July 4th that, hey, we did have the right business model. And, you know, I think we put together an operating model that we shared out with the board and said, hey, we got a couple of weeks of cash runway. We needed immediate funding, but believe us when we tell you we figured it out. And I think a couple of things. One is you backed us, Andrew. Which meant a lot at the time. And we did figure it out. You know, I didn't raise capital again. I think we did like a small bridge round, but I didn't raise capital again for over 12 months because we were able to prove out that we could have cash flow stability. So that was clearly a key point. Another key point was, you know, my partner, Nick, he had a accident in 2018 that was a terrible one. Fortunately, he's alive and well today, but it was tough to lose your partner in early 2018 like that. And you know, I was grateful for all the times that we had, you know, building the business together, and also felt confident like, hey, I'm going to take this home for myself, my family, and Nick and his family. You know,
there's a question on like through this. I think you're talking about like the journey, like you as an entrepreneur, as a leader and an operator, like how did you start to develop yourself and you know, the kind of these operational principles of, you know, how you said, hey, this is working, let's do more of this, right? what was your guiding force? How did you yourself think about developing and navigating these channels? And it takes a lot of, as you said, both of an emotional and a physical strain on you. Like how were you even able to cope through some of the stress of that?
Well, I mean, my entire life was in the business. My wife came on and started running our entire customer experience in mid 2017. We have 4 kids, so you know, if we didn't make it with Factor, we'd have to figure some things out. So I think that was, I really didn't have another choice. We burned the ships. We were all in, which I think is important. If you're really going to do something, you got to go all in. You can't be, half in. Um, Another thing, I mean, I worked with an executive coach from the time I started at Factor till, still today. Not as frequently. I would talk to him every week. Then it was every 2 weeks. I mean, now I talk to him once a quarter. But I mean, it's just that was really important. Um, Improving and managing my emotional intelligence and helping me grow as a leader of people and understand where my blind spots might exist. I think was a key thing. Um, Another really key thing was just going back to the product. You know, Here we are at a point, even in 2018, where we're outsourcing production, and I just knew if we were ever going to become a business of real value, we had to control the product. It was too important. And it was something that we could never fully take pride in and rally around as an organization if somebody else is manufacturing your food. Even though we always procured the ingredients, the packaging, coordinated the shipping logistics, set the production schedule, it was never truly ours if we didn't bring it in house. And that was a turning point in July of 2019 when we moved all of our volume overnight to in-house production. And at that point in time, we had now scaled up. I think in beginning of 2018, we might have been doing 14,000 meals a week. Now fast forward to mid 2019, we're doing 70,000 meals a week. And it's not like we were unprepared for the transition. It's just you never know what you're getting into. We had labor that just didn't show up that we thought was going to show up, and so the next 3 weeks were I was sleeping at the facility. It was 24/7, and I think what I'm super proud of is the team rallied around that. Everybody in the organization was plating meals, washing dishes. And I think, what I'm super proud of is I've had other people, in talking with them, post that time, really appreciate you showing up and staying in the kitchen till 2 a.m, trying to figure out where the bottleneck exists in plating. Or, our CTO was washing dishes with me, 4 a.m, because that's critical to being able to get meals out. And what they told me is we couldn't go home because you were there. And I think the big thing is like doing the work as a leader and not being above anything and understanding all aspects. And it was really, not only was it awesome that we got through it as a team, but it was what I needed to do because I then knew the operation better than anybody else. And that was powerful to getting the quality of the product out the door that we needed to get out, to our customers. And from there, it was just one awesome experience after another once we brought production in-house. So that was an amazing time.
Yeah, I think I look back upon the decision to insource as, it was, I remember the board meetings where like the emotion of like saying, we have to do this right? And as a board, right, we were trying to, I think, talk through like, okay, is this definitely the right decision, right? Because this was a bet the company type decision. Like, yes, we had more capital. The business was a little bit in a better spot, but we weren't like overly capitalized for sure, right? You talked about our capital challenges, and the business was going well, but sometimes, in food, you're only as good as your last meal. And there was a lot of risk here, right? That if you couldn't make this move, and there's lots of businesses that that are littered in the industry where they have a major operational challenge and they can't recover. And so I think for me, looking at how you that was just a decision where you just, as the entrepreneur, you had such deep conviction that it was the right decision. Us as a board, we felt like, hey, like Mike, we can't. The CEO is telling us we have to do this. And I think sometimes as an entrepreneur, you have to convince your supporters that, like, with that type of level of emotion, if you're that believe it's that big, and then, I think you took, you did what it takes, right? Like I remember, yeah, the weeks after that when everything was going wrong, and I think you had multiple family members helping you pack meals on the weekend, and but you dug in, and I think we, as always, when we talk about great entrepreneurs, right? It's the execution. We just have full faith in their ability to do it because they're going to do what it takes. And I think you exemplified that in that situation, and was a great. I think it was a great inflection point for how you truly kind of navigate just a major strategic, opportunity like that.
Yep. No.
Let
Real quick on that.
Yeah.
I think for entrepreneurs, one of the things I've seen now, and I was guilty of this early on, is um, you're you're looking for consensus early on from the board, and you're looking to acquiesce to certain board members, or at least I was, and I've seen it from other entrepreneurs. I'm not saying this is always the case. You're looking to sort of acquiesce and make sure everybody is, kumbaya. It's everybody's aligned on a decision. That can be tough. Sometimes it works, but as a leader and an entrepreneur, you at some point have to say, listen, this is my vision. This is how we're going to do it. And you can judge me on the outcome and the success or the failure. But I think it's important also internally for your business, because if you're trying to acquiesce and make sure everybody's aligned at the board level, you could have one board member tell you something, and then you're out leading in that way to your organization, but then another board member might have a different opinion, and now it's not cohesive. You're not looking like a strong leader. And so I think, and again, this was me working with my executive coach and getting to that point, getting comfortable with saying, no, listen, this is the right thing to do. This is my vision. And if it doesn't work out, listen, I'm willing to put my career and livelihood on the line for it. And I had such a strong conviction around it that, it was a perfect inflection point for me as a leader, to really push on that front.
Yeah. And I think kind of when you kind of maybe dive in just a little bit, just more around like the investor relationship, like it seemed, for me in the beginning, we talked earlier how you were leveraging investors like ourselves. We also, give a shout out to the Listen Venture team with Jeff and Rick, who were amazing partners in this, as well as, Adam Goldenberg, who was our independent board member, right? We had great set of investors. And in the beginning, I think you did a great job of obviously leveraging what we could bring to the table. And then over time, I think you kind of were transforming yourself into, how, you leading the enterprise, right? As you said, like, not like, yes, you're not doing it for the investors, we're doing it to support you, right? And then, leveraging us and all our various specialties and capabilities to help you better run the business. Maybe just talk a little bit more your perspective on how did you think of like the investors and cultivating that and trying to just bring people in over time.
Yeah, well, I think there is a level of trust that's required to be created before maybe you can necessarily just say, "Hey, here's how we're doing it. You guys are gonna jump on board." And one of the ways I did that is through complete transparency around performance. And it's something that we just had built into how I operated, where my team knew the date every week. Every day we talked about numbers so that the team was thinking in terms of priorities that were based on data driven decisions. And so then they can act as owners and you can get leverage from those employees. But um, employees is a bad term. I think like just leaders in the organization, just great leaders and great people. But then I would communicate that to the board on a weekly basis, and it would include the key, dashboard business KPIs, as well as a position on cash. And so it was, and I would also share out the weekly emails that I would send to the team, to the board. And I think that, even though that sounds very simple, it it created such a level of trust and understanding for the board of like, hey, these guys are on it. They know what they're doing. And so then when it's like, hey, here's the direction we're going, it's not a battle. It's it's really quickly to get any sort of alignment. And if somebody's disagrees, then you can say, hey, listen, this is the way that we're going to go. I'm willing to make a bet on personally on it. And so I think
Yeah.
that's an important piece of it.
Yeah, no, I always remember those emails you sent. Like they were like one of my favorite emails to get every week because you just quickly understand when the business and when the business was doing well, great. But you could also start to see when there were maybe the numbers, if there were some strain. And we always talk with entrepreneurs about getting a good KPI scorecard because that is like the guiding force. Like this is our we can't just talk about anecdotes. Let's use data to help us actually decide. And I think you did a great job of helping the investors. Like we were all in it, right? We knew what was happening. You were communicating things back to us in a way so that it wasn't like, hey, let's have a meeting every quarter and like talk about like the three things that we need to talk about. It was like it was an ongoing conversation, and we could navigate it together. And I think that's, when we kind of try to work with entrepreneurs, we want to get aligned with them on what's the strategy. And most importantly to us, so like, what are the key issues and opportunity questions we need to answer to try to figure this out. And I think, great entrepreneurs do a great job of leveraging the people around them, to help navigate that.
Yeah, that's right. We didn't spend our board time talking about the numbers because everybody was up to speed. We talked about the ways that we could impact the business moving forward, whether it's strategic issues or connections that we can make for future growth opportunities or employee related, hires or issues that need to be made. So yeah, that's right. We could
Yeah.
fast forward those meetings and get the most value out of them.
Yeah. Great. We've got about 10, 15 minutes left. For those who are watching, feel free to add any questions to the chat, and I'll try to integrate them in here towards the end. I do want to spend a little time kind of fast forward talking about the exit, right? So we talked about some of the inflection points around the way of really trying to unlock the business, and certainly it was fun while we were scaling. COVID obviously was a major impact there. But the sale process kind of started, shortly after that. And, there aren't always great conversations around, what happened in these. And so would love for you maybe to share with the audience, talk us a little bit just through the journey yourself on thinking about the exit, and the process starting, and how when HelloFresh reached out to you, how did you think about the timing to sale as well as the partner or the process? Walk us through a little bit some of your reflections on the exit.
Yeah. Okay. So real quick, when COVID hit, we were about $85 million in run rate sales. I was trying to raise a $15 million round that I ultimately only raised like, a third of that. In spite of, I mean, people started coming at the end once HelloFresh reached out, which is funny, but, and it was interesting when COVID hit, it was scary. Are we an essential business was the first question. We only had about $4 million in cash, and we had $4 million of term debt. So our net cash was zero. And here we are, a sizable business at this time. COVID hit, we didn't scale immediately. We sort of stayed at, we stayed flat, 85 to 90 million in sales for the first 3 months. And I'm saying when COVID hit, it was like the second week of March. We jumped up that first week, maybe like 14,000 meals, which had an AOV of, about $100. You can figure out what, so it wasn't like a huge jump, but, then we just continued to operate. And at that point in time, I was, maniacal about understanding what the consumers are saying and where we're at from a consumer experience. So every day I would call 3 to 5 customers, either on my way to the facility or on my way back, just better understanding their experience. And, that was super helpful because we were really able to hone in on what product we needed to deliver, what the experience should look like. And the team just rallied around that. And then the first week of June hit, which is usually a seasonally slow month for us. It's the slowest month of the year, typically, that in December. And we grew week over week for 26 consecutive weeks. And about halfway through that, HelloFresh reached out and they said they were looking for partnerships. And fortunately, my previous background in investment banking and venture, I knew what that meant. And, the rest is history. I think, it would have required significantly more capital for our business at that point in time, which has proven out to be the case. So I knew I'd have to go out and raise a $50 to $75 million round that would require fairly significant dilution, and also didn't know where that was going to come from because, like I said, we couldn't even raise 2/3 of a $15 million round. And not only the more capital, but build out would be needed to increase capacity. And I think we were lacking from a performance marketing standpoint at our scale. We really needed to elevate there. And so and also, I had put everything in my life into this business and so had Nick and I wanted to make sure that we were both set and this was the right opportunity. As it relates to HelloFresh, I think it couldn't have been a more ideal partner. They were strong in the areas where we needed them to be, which is savings from a COGS perspective by leveraging their economies of scale, as well as their marketing is second to none. They had a far more diversified marketing, in their marketing channels than we were. They had a team of creative and copy, and just more sophisticated across the board. Plus their technology was a step up just because they've had so much trial and error and they have the playbook that they know what works. And so, and they needed us for the ready to eat space because we are best in class as it relates to how we produce our meals, the team, the execution, it's second to none. And so for all those reasons, it made a lot of sense. And I was able to get the board aligned. And I think looking back, hindsight's 2020, it was the best decision ever because you've seen what's happened in the marketplace as it relates to multiples, exit multiples, that is. And there really aren't a plethora of buyers for our type of operation today. And, with the dilution impact, with the scale and stage that we were at, having a partner that could take us to the next level, it's been a perfect marriage.
Yeah. Yeah. I mean, I think, I think you kind of like hit it on the head, right? Which is you found, a great partner and a great opportunity to exit. And I think, I think it's interesting, right? Because you think starting the business is the hardest, and the stress or the decision to exit is also not an easy time or thing. And as I look back upon it, it was another situation where you as the entrepreneur kind of really navigated yourself to think through what is the right decision, right? And kind of carve out the kind of the best path for the company, and then communicate that, get everyone aligned on that, and kind of, as you said, kind of throwing yourself into it. I think that's one of the three themes of kind of I always look back on you as the leader, right? Is you kind of really, you put everything into, executing from a day-to-day basis, but also to these strategic decisions. And, that those are kind of some of the things to, get everyone, to the, aligned and into the finish line. And I'm sure also to get HelloFresh to kind of, to the finish line themselves, right? Because, obviously as part of this, you're trying to, bring on the new partner, and, they were kind of your new home that you needed to cultivate.
Yep.
Yeah. So, um, just while we kind of, thinking going forward, right? Meal space, we've talked about some of these challenges of labor, inflation, freight. You guys have continued to thrive under HelloFresh. I'm sure these challenges, there's a conversation, questions around acquisition, costs of acquisition. There's been a lot of discussion around that around, some of the changes online. So how do you think kind of go forward? Where's meal delivery? How are you trying to take Factor forward from here? What's it been like under HelloFresh, and where do you see kind of Factor going, into the future?
Yeah, I mean, I think it's been phenomenal under HelloFresh, and I think we're still in the early innings of ready to eat. I mean, brand awareness for Factor, I think, is like 4%, unaided. So, I mean, you just look at that and you look at the scale that we've continued to see. I'm extremely bullish on what we're able to do within, the HelloFresh platform. And we also have, HelloFresh has invested significantly in continuing to grow Factor, and it's proven out to be really fruitful for the Factor folks and for HelloFresh. But that's required, significant investment. So, you know, continuing on the existing channels that we operate in today, I see tremendous runway, especially with a great partner like HelloFresh behind us. As it relates to sort of innovation, you know, I think there has to be ways to figure out along the way how to extend life of gel packs, either by way of further packaging innovation, or the gel pack life themselves. So I think that's like something that's low hanging fruit for our space specifically. If we're ever going to really crush retail as a distribution channel, I think the supply chains within retail need to evolve, specifically for a fresh product like ours. I don't think it's quite there yet. And so, longer term, I think there's opportunities there. And then we're starting to look at it more and more, but robotics as a way to improve costs, not necessarily from a pick, pack, and ship, but from a plating perspective, because that's a heavy, high labor intensive operation within our overall operation. And I think the last that everybody always talks about is like, how do you continually reduce your packaging footprint? It is another area of innovation that's going to continue to evolve.
Yeah, yeah. I saw a couple questions around kind of just capital, and we touched a little bit on this, but we're now in this market where capital is getting scarce again. And it was always a difficult challenge to raise capital for Factor because people had seen what happened in the public markets with Blue Apron. There was a lot of questions around meal delivery. I'm just interested in reflection kind of for you, kind of, and as words for the entrepreneurs who are listening, like how to think about capital raising, how could you have done it differently or better, or just in an environment, and how does that capital availability change how you thought about how you needed to build the business and manage profitability?
Yeah, maybe I'm the wrong guy to answer this question because I sucked at raising capital. I mean,
yeah, or the right one.
I thought I'd be good. I'm a former investment banker, VC, can't raise a round appropriately. I think it's a tough market today. Also, just looking at a lot of early stage companies trying to raise capital in the present market that we're in. I think what you have to do is have very clear direction on your pathway to profitability, while continuing to show, profitable growth. And, to me, if you have I'm just speaking from a product service focused business, how you can get to that place is just by showing why your product and experience is best in class and continuing to evolve initiatives around that. I think you have to be ruthless on your prioritization at this time. What are the 2 to 3 things that are going to, drive 80% of what you need for continued growth? And we always did it right at Factor. Nick and I would always use the ICE method, impact, confidence, effort, ranking different initiatives that we would work on that I think served us well. And I talk about like that because I don't know that they're, as it relates to raising capital, I mean, you just need to talk to so many different people. You need to tell the story. I knew my numbers inside and out. I had significant conviction around the space, but it just wasn't good enough. And I was, break even. I think there are some spaces that companies operate in that are just turned off by investors, but that can be a great thing, like it was for us, because it forced me personally to be a better operator, and it also reduced the true competition in the space. I would talk to investors that weren't knowledgeable on the space, and they'd say, "Oh, it's super crowded." Well, they don't really know what they're talking about, because the moat within prepared meals is the operation, and it might be crowded locally, but that's not a sustainable business. That's a true competitor. So.
Yeah.
No, I don't know if that answers it. I don't have any.
No, I mean, at the end of the day, and this is, we tell entrepreneurs, right? You have to, what you can control best is the business you're building, and build a great business. And, the investment capital, will follow. And even if it doesn't, as you just said, right? Like, even in this current environment, that can actually be an opportunity for you as an entrepreneur, right? Because your competitors are unlikely to get funded as well. And even if they are, right, we had a couple of competitors who did get some good funding, but then they went out of business because they didn't execute and they weren't able to raise more capital, right? And so I think one of the key successes to Factor, right, is you really did build that best in class operation that unlocked the market opportunity, and others who were trying, just they weren't able to do it. And it allowed you to kind of, I think, scale it in an interesting way and do it. So that's great. I guess one last just final question, just you on just future, you mentioned kind of evolve. There's a question in the audience around supply chain and evolving with retail. Just interested more on, like, are you thinking on how are there different ways to get meals to consumers and channels, and what are some of the biggest barriers to kind of being able to do that with a fresh product?
Yeah, well, I think it comes down to shelf life. I think, from when we looked at it previously, the shelf life had to be at a certain level that complied with the supply chains within retail. And that was always a barrier. And so what you end up getting is, even if you executed a relationship with a retailer, you're going to get a lot of chargebacks and returns. And also you have, like, the management of that inventory is super challenging, so that it's still as fresh and a good representation of the overall quality of the product.
Yeah. Yep. All right. To finish on just a high note, your go fight win, the Mike Apostle culture. I think just tell us a little bit, just you as an operator. We always talk about Mike Apostle, the great operator, just the culture, your mentality to business. Maybe just tell us a little bit the origin of how you think of that, the energy, and, send us on our way, kind of on that kind of a final positive note.
Yeah, well, I mean, if you're going to come to work, you want to feel like you're part of something, and you're looking to win. I mean, that's just who I am. If I'm not competing, I'm bored. And so, fortunately, I was able to find people that had a similar mentality, and we were looking at it as we wanted to be the number one prepared meal player in the United States. And by the way, we are today by a lot. We have over 50% market share today, which is just insane in the ready to eat space. But I think it originated from, it takes so many people to get a meal out the door. And my rallying cry internally, in addition to Go Fight Win, was every meal matters. Because if you could deliver on quality for every single meal, you would win. And in order to do that, every person in the facility matters. And so I would learn everybody's name, because they're human beings and they matter. And I was just so blessed to have so many great people around me that believed in that messaging, which is true, and is why we've been successful, and it's why we're best in class for what we do.
Yeah, I love it. Thank you, my brother, my friend. It was fun to relive some of the journey with you. Really appreciate you taking your time to share some of your learnings and reflections. To everyone watching, thank you for coming. We will share this video as well outside. Also, a shout out to my partner, Ashley. She did a similar interview with my mom, actually talking about her experience running Ingredion. So feel free to go on our LinkedIn page. You'll see our previous videos. Also, stay tuned for future interviews. And if you have ideas on other topics you'd love for us to dig into, feel free to shoot us a note. You can always reach us on LinkedIn or Andrew at BluesteinVentures.com. Love to keep this going. And thank you, everyone, for your time today.